Hey guys, what's up? I wanted to do a video on Big Kahuna Wave Trading, what it's all about, what's different than other trading systems, how I developed it, etc. Because I know some of you are curious about why is it such a big deal, and how does it find all these big winning trades. And so basically, what happened was, God, probably early '90s. I had gone into a bookstore looking for a good book on trading, etc. I just wasn't sure about how to get into trading. Found this book. It's a book by Nicholas Darvis, How I Made $2 Million in the Stock Market, and started implementing his system, actually testing it for a few years. And it was actually a pretty good time to be testing trading systems. Unfortunately, by the time I really figured out all the nuances of it, the tech bubble was pretty much over. I mean, we were at the back end of the tech bubble, and a lot of the momentum traders were getting burned big time. I mean, there were people out there losing 50 to 75% of their account trying to surf the back end of that those stock waves, and so kind of made me a little bit more cautious about just jumping into it. And I'm kind of slow and tedious about learning, and I may spend a little bit more time on the research part than the normal person would. I just have to get a level of comfort in my mind that makes me really feel solid about the system. And there were a lot of glitches and problem with the Darvis system overall for the new market. It worked very well back in the 60s, but even my understanding is that even Nicholas Darvis lost a good part of his account later on. I don't know all the details. I've just heard other people or seen other people write about that. So, and I could be completely wrong, but that's what I understand. But the point I'm trying to get at is that because of that and a bunch of other instances of learning other systems and not being happy with the performance of them, or not being happy with the consistency of them, I started basically just going back and reverse engineering every big winning stock I could. And I mean, literally thousands and thousands of charts over many years. And so basically, what happened was after a period of time, I started to really develop the concept called a cycle based approach to stock investing. So, what I mean by that is that when I study these stocks, I'd always find these big price spikes, and then the price would pull back into a consolidation zone. And depending on what it did in that first part of that breakout, I could generally predict what was going to happen or when it was going to happen on the follow-up breakout. And so, based on this cycle system, I was able to not only build watch list based on those breakouts, but also get a real approximate time when that breakout would happen, sometimes months in advance, just based on the cycles. And so building the watch list would allow me to have a stack of stocks basically waiting for those breakouts to occur, so that I can stack trade after trade behind them. You know, finish up one trade and get into the next trade, etc. Just based on the timing. So I think it's probably one of the best systems I've ever come across as far as timing, and not only timing but stock selection. You know, again, we're focusing on stocks that have big run-ups in the initial stage of that breakout and pull back into consolidation zone. That consolidation zone sometimes would happen to take a couple years, 2 3 years time. And again, at that point, I was looking at the long-term cycles and seeing, well, they lined up with the short-term cycles too, as far as the bar count. The bar count on a yearly time frame would be the same as on a monthly time frame. I know it sounds a little bit complicated, but I'm gonna go ahead and show you on a few charts, and I think you'll understand a little bit better. But the whole point behind this developing myself was I wanted to feel comfortable with the system and understand the system on the deepest level. It is really a pain developing your own trading system. Trust me on this. It's would I do it again? I don't know. I mean, we're talking about 20,000 hours into the development of this particular system, both the stock trading side and also the day trading, intraday trading, futures, forex, etc. And it was definitely a learning experience. So So the whole point behind this type of system is that it's based on monthly cycles, and there are swing cycles, etc., within those monthly cycles. But we're looking at charts that have long-term charts that have monthly cycles that are lining up to break out of a Cat 3 trend line. Generally, those are the ones that have the best possibility of entering a trade and not having your money sitting there for very long. So basically, the stocks that we're compiling into a watch list have signs of gathering strength, where they've been they went up, they came back down, they're starting to get a little bit ready to break out again, but we don't want to be catching it high. We don't want to be catching it on the high part of the breakout, because that, number one, it increases our risk, decreases our return. So we want to find these under the radar stocks at the right point, and ride them for quick meat of the move trades. We don't want to be languishing in consolidation zones. So the stocks that we target are capable of 50 to 200% gains or more in as little as 2 weeks, 2 months or more. Had a recent breakout on a stock, BEL, and it was a buyout. The stock itself only went up about 33% in less than a week. Not a bad trade by any standard, but the option gains were over 600%, and that's just on a 1 week trade. Again, that's from finding high tension, price squeeze stocks where you can read the cycles very well, and it was a real easy read for me based on long-term cycles, short-term cycles, etc. So most traders don't pay attention to these because they can't see them. These are not cycles that any trader, other than traders who have studied my system, are even aware exist. They're big holistic cycles, especially the long-term yearly cycles. And for example, the TY3 cycle is one that we use a lot. The trade could be 7 to 10 years developing, but the actual resolution of the trade can be over a few months' time, where the price squeeze just explodes. And so don't think that you're going to have to be watching a stock for years based on that. We're already building watch lists well in advance, and at the point that we let other traders know about them, they're within a few weeks generally of breaking out and catching a big trend. So this type of trading is very suitable for a full-time job if you're working and you don't have a lot of time to look at charts. Once you get into a trade, a lot of these trades can last 2 weeks, 2 months, or longer, and with minimal watching the stock, just basically looking at the cycles on the exit. And so these tools I gleaned from decades of reverse engineering stocks will give you a huge advantage in finding and trading those big winning stocks. It's basically a Darvis on steroids trading system, and again, built for today's market. And we wait for trades to come to us. We're not chasing trades. And for example, if you trade options, the option premium, the volatility is in an area where the option premium is low, and you can load up on the options on them. Also, we use a couple of key tools for finding these stocks. The BMI indicator, it's a breakout momentum indicator, and also a vector called the VR. And the BMI indicator measures the momentum, how fast the stock is, and the vector measures how far. So we combine those two indicators to find particular types of stocks. And basically the math behind the development of those two indicators are written into our stock scans. So we're able to scan the markets that sometimes we'll be building watch lists for months in advance. So as far as the style of trading, we meet after the market close and even late evening and examine stock for the next trading day. This is not white knuckle day trading. We do some AM morning chat, basically back and forth on some stocks, but most of us active traders are doing our own trading. And so after the close and late evenings, when we really focus on examining which stocks are ready for the next few days to few weeks, and we post those for members and people interested in those particular type of setups. So again, this is something you can do with a full-time job. You don't need to be glued to the computer. I'll show you some of the breakouts. You'll see that a lot of these trades last for months at a time. Again, we're trying to find optimal entries, and once you do, these what I call stage 3 breakouts, they oftentimes mimic the stage 1 breakouts. So if stage 1, which is the left-hand side of a cup, took about 2 to 3 months to make that run, quite likely the trend on the right-hand side of the cup will also take that long. So we're not about day trading. We're not about the white-knuckle day trading. So it's far different from that. And I'm going to actually break down a few charts in a minute so you can see what I'm talking about. Again, Big Kahuna type of waves. We're not focusing on stocks that have average potential. We're looking for stocks that have potential for, again, 50 to 200% plus gains in just a few weeks to a few months. And if you trade options on those, it could be quite a bit more. So let me just go ahead and break down some charts so you know what I'm talking about, get a better understanding of what's different about Big Kahuna Wave Trading and why you should consider trying it out. Okay. All of the terms you'll see in the charts in the rest of the video are explained in this free guide, 3 Signal Stock Surfing, Secrets of the Stock Market's Biggest Winners. If you haven't read it yet, you can download a free copy using the link below this video. Okay, the first type of trade we have many different styles, but this is just one of the ones we like a lot. It's basically stocks coming off of a 250-day low with high momentum. This is a 0.5 BMI breakout, vector of a 1. That brings our short list down very quickly to stocks that have strong follow-through potential. As you can see right here, a TM1 cycle printed right there. You got your Cat 1 here. Cat 1, you actually got just 2 cat lines on this one because of the shortened consolidation. That's also a sign of strength. So once you got the slinky setup, which is a higher low, price squeeze comes in, again high momentum in, high momentum out, optionable stock, and as you can see, basically about close to about, let me see, 24.33, about 75% gain in just about a month's time. Again, an optionable stock, and this is probably going to do some more following through once it pulls back. That's a very powerful setup. Deep tube, we pay a lot of attention to the stocks that have that kind of vector and BMI coming off of a 250-day low. Let me show you another one here. Another trade we like is a price zone trade. Basically, we get a strong breakout of a key price zone with momentum. This one, PAYC, Paycom Software, had 2 BMI breakout. VR5 a little slower on the vector, but this is the kind of trade that's real suitable to option trading. But you had your Cat 1 set up right there in May. And actually, let me pull this line over here. Cat 1, Cat 2 right there, and Cat 3. Pull back off of that. See this key psychological price point, $100. And once it pulled back off of Cat 3, rocketed out of that. You can see right there, very quick 60% gain in about 6 weeks. This is the power of, again, strong momentum, strong support, key psychological price point. I'll show you another one of those types of trades. Very similar setup. This is NVIDIA Corporation, big BMI, 4 BMI in that one, and that was also a vector of 5, VR5. And 3 cat lines. Actually, the third cat line set up inside the second cat line. That's not uncommon. Let's see, one. You got the TM2 right there. You got your slinky setting up right there. You can see right there a huge breakout of that psychological price point zone. And that thing went from $100 to close to $300 over a year and a half plus, and just a huge run up on that type of trade. Again, the options on this did very well. I caught a good portion of that, but kind of wish I had a lot more into the trade. I again got caught up into too many trades going on and not seeing how powerful this particular setup was at the time, but that happens. Let's look at another trade. This one is a TY1 cycle trade, and you can see a really big shakeout, but once that price spiked up, set the TY1, you had a Cat 3 pullback. Here's Cat 1, here's Cat 2. Pull that out a little bit. Cat 1, Cat 2. This is the TY1 line. Pull it back there. And there's Cat 3. Actually, you had the Cat 3B, same cycle, a little bit further out. Move the trend line. Split the difference once you get the channel formed. It fell a little bit short of the mid channel. And typically, it usually touches the mid channel. If it doesn't touch the mid channel, it's a sign of strength. Could have bought the breakout of the highs right there. Went from about $33 up to $130 in 1, 2, 3, 4, 5 months. Optional stock. This is the power of cycles. If you find these cycle-based setups, best of them don't come along every day, but this was kind of telegraphed. Vector on this. This is about a 2 BMI, VR1 1.5 on that. Just a really strong setup on it. And you can see the type of follow through you can get on these Big Kahuna waves once you understand how the combining the momentum and vector with the right cycles. Again, this is a pullback off of Cat 3. Perfect opportunity to get into the trade. Show you another one here. Next one here is a PBC zone trade. This is CDNA. Very nice run up for us this last year. Had a 14 BMI setup, really strong PBC zone. Slinky setup across the lows. You had to squeeze come in here. Again, we're strong momentum, meet strong support within cycles. This is what can happen. Went from $12.50 up to close to $30 within 2 months or so. It's pulled back. It's actually seems to be setting up another one of these. We'll see if it gets follow through on it here. We got, this is as of early 2019. We got Cat 1, Cat 2, and Cat 3. Pullback off of Cat 3. So far, a soft landing pullback. It's got that $25 psychological price point zone. I would not be surprised to see it target a solid 100% out of that PBC zone, which would take it to about $35 area. So that would be a nice little gain if it did. Has a slinky squeeze coming in there too. So, but no telling. It gets up so far off the lows there, it would actually be safer on the options. A lot of times it will shake out when it tries to reach out or take out the prior pivots too early after having a big run up like that. But this is such a solid pattern. I'm not so sure it won't follow through pretty nicely. Show you another one here. This is one I'm in now. The option's up about 400% in just a few weeks' time. This is a 11 BMI setup. You had a Cat 3 breakout, TM3 in 2018. Set to TM4, pull back another Cat 3. 1, 2, 3. Pull back off of Cat 3 inside the handle, right around $10. Now you got the PBC zone. Hopefully this will be a soft landing. After this big of a gain, we're talking 300% or so in a few months off of the lows of that. Unless there's a really big news story lurking, it's definitely in a risky area. This is why I bought options even over here, because of the volatility and the fact that when it craters, it's probably going to crater pretty hard. But we got huge trading volume. I would not be surprised to see this $20 psychological price point prop up the prices and head up to north of 30 or $40. Would not be surprised, no guarantee, but I'm pretty well situated on the options, so I got a little bit of leeway there if it gets a little bit uglier on that pullback. I'll show you one more here. Okay, let's go ahead and really drill down on these long-term cycles. This is on AAXN, and it's had 3 cat lines set up over about a decade. And cat line 3, Cat 3 set up in 2015, had 3 cat lines on the pullback from that, and that was also TY4 cycle. Both the Cat 2 and the Cat 3 were. So pull back in, you had a slinky setup, real strong psychological price point support there at 20 bucks, and as you can see, it exploded out of that. This is one I caught on the breakout on options. Let me pull up the options. Okay, here's the option trade. Bought the options, about 10 contracts, average price about 360 on that, $3,200 into it. Sold it over, scaled out of the trade, sold 2 first and then sold the other 8, total of 29,000 on the exit, minus the $3,200 into it. It's 26,208 divided by the original investment, 819%. Again, risking about half of that, 1,600 bucks. So I think you can see how powerful catching these options that are maybe underpriced because people aren't seeing them as easily as they might be if they were looking a little bit closer at these cycles. Let's look at another one, similar situation. This is on WWE. This is a Cat 3 setup, a TY2. You can see 2014, 2017 Cat 1 TM5 cycle, Cat 2 TY1 cycle, and Cat 3 TY2 cycle with a slinky in it. And I caught it a little bit later than I wanted to. I don't know why I did not see this prior to that, but I had to. Actually, I did not even post the trade. Daryl, my trading partner, posted it and looked at it and said, "Oh, missed this one before." But this was a long-term cycle setup. Excellent TY2 slinky on that. And as you can see, it went from 20 bucks to about 90 bucks very quickly over almost about a year, but it did a lot of that damage. And see, it went from 20 to 40 in about 6 months, and then to 60 bucks, 200% in close to 6 months or so on that. So really big run up on it. And let's look at the options on it. So this one I had about 6 contracts at $5.90, about $3,500 into it. Sold them for $30 a contract, so 18,000 total gain on the 6 contracts minus the money put into it. 14,800 profit, 417% gain. Again, I'm risking about 1,700 bucks to make 14,000. Can you see the power of these long-term cycles and the squeezes that come off of them? Let's look at one I recently traded. Yeah, this trade is actually in motion right now. It should resolve itself within, hopefully, in the next month. That's my hope. I'm running out of time on the option expiration, but it's pretty fast when it gets moving. I got a bunch of contracts, about 22 cents each, or 22 bucks a contract to control 100 shares. And this is all based on long-term cycles. And if we can get a nice big gap up breakout, it would be some pretty good returns on the options. Big BMI on the left-hand side of this. And we got a TY3 cycle up here, Cat 1, Cat 2, Cat 3, see 1, 2, 3. So this is probably a TY3A and TY3B. And you got the internal cat lines, Cat 1, Cat 2, Cat 3. And as you can see, what I always say is wait for the Cat 3 to set up and buy the pullback off of it. Had you bought right here, looks like a pretty good buy. Problem is you have this is a weekly chart. You got 1 month, 2 months, 2.5 months just to get back to where you started. But had you waited till Cat 3, the internal cycle off of this pivot, here's Cat 3, and you got a weekly cycle there. Let's see here. Got a TW2 cycle with a south channel extension. So basically, that's the TY2. That's the lower part of the channel. Here's one extension of the channel, very close to the bottom. So just waiting until this Cat 3 set up and buying a pullback off of that, very close to the lows of that, and avoid at that dead zone from that breakout of Cat 2. So let's look at my option pricing on this. So I got 2 different contracts. I bought one for February expiration. I only have 2 weeks left on this, 2+ weeks 29 contracts, got at 22 cents, paid about 630 bucks, so 22 cents or $22 a contract. And then got the second batch, another month out there, just 10 contracts on that, a little bit more expensive. Well, actually not much more expensive, but I didn't want to have that much tied up in this particular trade, being where we're 6 weeks out and we don't get that pop on earnings. It's going to be some sideways. So either way, we got right now we got 39 contracts on it. If that thing moves $2 or $3 in the money on that out of that 750 strike, if it gets to 10 or 11 bucks, those 39 contracts would be 350 times it would be about 14,000 bucks on a $800 investment, assuming it did it. That's a big if, but certainly has the momentum potential for it. And I just probably need to be a little bit further out on the expiration to feel safe with this. But I like the contract pricing, and I'll probably buy some more if we don't get through the February expiration without a pop. Right now, the current price of the stock's around $7.80, so it's 30 cents in the money on all those contracts. But wouldn't take much to really bump it up quite a bit on all those contracts. So I think you see the power of these long-term cycles and even the short-term cycles, using the CAT 1, 2, 3 lines and paying attention to long-term cycles in conjunction with those short cycles. Okay, that about wraps it up. Hope you enjoyed this video on Big Kahuna style trading. Again, it's a relaxed form of swing trading, and we're all about being selective and not over trading, and sometimes just being in a keeping the powder dry mode, waiting for the best setups to come along, so that we're not tying up our money in less than stellar opportunities. So it's just the way we focus on trades, and we're okay with being having a dry spell a month or two at a time if the market's really rocky. It's a way to keep the profits you made in the prior cycle, and that's just it's one of the advantages of a cycle-based approach like this, because when the market gets rocky, the cycles will generally stay inside of their trend lines and not do much until we get a market spike that supports that. So it has its advantages to really being selective and waiting for these cycles to unfold, so that you have the big runs and great opportunities on options. I think you saw by the long-term cycle plays the advantages of that. So if you would like to test the waters and see what the Big Kahuna Trading Club is all about, I'd encourage you to take advantage of the offer you see below this video. We'd love for you to come check us out, ask questions, and get a better feel for how our system can help you find and trade some of the rogue wave stocks you've seen in this presentation. Hope to see you on the inside. Take care.